Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. We are here to take your questions and ask Rick himself. Rick, how are you, sir?
Life is wonderful, Steve. Thank you for asking. I hope the same can be said for yourself and everyone listening.
Yes, sir. Yes, sir. I am just capital. I'm excited for today, as always, for all our discussions. Do you have any opening salvo, any opening thoughts?
Yeah, a couple things. People who pay attention will have noticed that a short report is circulating on Aya Gold and Silver. Interesting to look at the chart, interesting to look at a surge in volume. Before that chart was, that short report was released, looks like somebody got themselves good and short before they distributed what they see as bad news. I, on the face of it, although I haven't done much study, don't believe the contents of the report to be true. I say that simply because I've done business with Benoit LaSalle going all the way back to the Semifo days, which is to say almost 2 decades. And although he is an aggressive and flamboyant promoter, I do not know him to be a liar. What I'm suggesting, I think, Steve, is that we try to get Benoit on the Rule Classroom, and we put him through an impartial affair, but not necessarily friendly grilling, to get his side of the story in front of the attendees to the Rule Classroom. People who would like to see this occur, or people who don't care, should comment in the Rule Classroom as to the desirability of us going out and getting Benoit, assuming that he'll do it, to come into the classroom. He has been a long time exhibitor at our conferences, and he's been a very valued presenter. I'm assuming that he would welcome the chance in front of a potentially friendly audience to deal with allegations that have cost him 17 or 18% of his market capitalization today. There can be no guarantee, ladies and gentlemen, that he will agree to do this. His lawyers might decide to muzzle him. Benoit's hard to muzzle if you ever get him in the classroom. But I think it would be instructional if the attendees in the classroom had a look at Aya's financials, had a look at the reserve and resource report in question, had a look at the allegations, and then were able to participate in a call. This is very much what I've done for 40 years with my own money. I hear noise that's generated a market response, and I try and ascertain whether or not the news, good or bad, is factual, and take advantage of it. And I think it would be fun to do this in real time. Note my bias. I'm an Aya holder. I was a huge beneficiary of Benoit LaSalle's efforts at Semifo. I mean, huge. And so my bias is that he is innocent. But this is a bias that thus far is unblemished by work. I did original work on the reserves and resources at both deposits from information which was distributed to me by the company, which the allegation suggests is fraudulent. So I look forward to diving deeper into the circumstance, and it would be amusing to me to take the fellows from the Rural Classroom with me in this discovery. People who are interested in this should let us know at the Rural Classroom, so we know that it's in your interest that we do this publicly with you, as opposed simply to my calling Benoit and satisfying my curiosity privately. We're willing to do each. If we do it in the classroom, it requires substantial time and attention from Albert, who of course we have other uses for. So we need to know that it is in everybody's interest to attempt to cause this to occur, and also know that even if we decide it should occur, Benoit or Benoit's lawyers might decide that it should not occur, in which case we will inform you, but we wouldn't proceed. The second thing I want to talk about is the fact that the space we cover, primarily in the classroom, which is to say junior resource stocks, are doing superbly well. We have an upcoming boot camp that could not have been more fortuitously timed. This is to say the third in our series of gold boot camps. The first one, many people will recall, was about gold itself, the investment case for gold, and how to own it personally, how to buy it, how to sell it, how to store it. If you're a Battle Bank customer, how to finance it. The second discussion was the logical next turn in a gold bull market, which is to say the best of the best. We talked about the Francos, we talked about the Wheatons, we talked about the Agnicos, those companies. Normal bull markets, of course, go from gold to the best of the best down to the rest. The third will be the rest, the junior producers, the second tier producers, the developers. And those stocks are on an absolute tear. This is the first time in my life that a gold bull market has proceeded from the bullion all the way down the value chain so quickly. And so this discussion is at once an advertisement for part 3 of the boot camp, which I urge everyone to attend to. I had not anticipated that the bull market would reach this far down the value scale for 18 months or 2 years. I thought we would have a very, very, very long time to educate people before they put that work to use. That is not the case. The time is now. So this is extremely, extremely timely. Note that this, like any other rule branded investor education product, comes with a full money back guarantee. If you think for any reason that you didn't get your money's worth, no worries. We'll give you your money back. Note too, that over almost 40 years of making these promises, we've had to refund about 0.1% of the tuition that we have charged. I think the risk is de minimis, unless you are the type of speculator who buys the Sunday paper for the crossword puzzles and the funnies. If you aren't prepared to spend 8 hours working hard in the boot camp, and if you aren't prepared to replay the tape at least once, don't come, because we're going to work you very, very, very hard. Let's talk about something else, though. Let's talk about my own response. I've been investing heavily in juniors for the last 5 years, initiating financings, participating in financings where there were very few other participants, buying stock on market that I thought was oversold, and I have a substantial position. I mean, a very substantial position in the juniors. And I'm taking my risk off the table this month, simply because the market has come so far so fast, and simply because I have so much money in the sector. Because I had anticipated that the juniors were going to be dormant for another 18 months, I find myself with positions that are up substantially. I find myself with positions, hearkening back to the lessons in the Rural Classroom, where the price that I had anticipated receiving for a company after an unanswered question had been answered is received now before the question has been asked. The consequence of that is that in the month of December, I'll be selling about a quarter of my junior positions. By selling a quarter of my positions on aggregate, I will be able to recoup in my own genes all of the money that I have invested in the junior sector over the last 5 years, plus pay the capital gains tax. So although I think the sector has a long way to go in an abstract sense. In a personal sense, I have the ability to completely de-risk my position in the sector, which, by the way, I think has at least 5 years to run. So I want to tell people, first of all, that I'm doing this so that they take all of my remarks in the course of the next hour in context. While I deeply believe in the sector, while I believe that the gold bull market has maybe 10 years to run as a consequence of the deterioration of the purchasing power of the US dollar, I also believe, with regards to the juniors, I've been rewarded too far, too fast. I also would note, and those of you who are younger than I should remember, that within a secular bull market, you can have some relatively ugly cyclical declines. I'm not suggesting that this is imminent. I don't know. This isn't what I do. But I remember very well in the decade of the 1970s when the gold price ran from $35 an ounce to a high of $850 an ounce. In the middle of that market, in the year 1975, the gold price fell by half, from $200 an ounce to $100 an ounce, and the XAU fell by almost 65%. Without derailing a bull market, all I'm suggesting is that you have to endure cyclicality and you have to endure volatility. I'm reminded too of an experience that I had personally in 1983 or 1984 after the crash of that legendary oil bull market in the 1970s. I remember driving through Midland, Texas, in the heart of the West Texas oil belt, and seeing a bumper sticker. And the bumper sticker said, I quote, "God, please give me one more bull market. I promise not to waste this one." At age 71, or no, I'm not, I'm age 72 now. At age 72, this may be the last bull market that I participate in, to the extent that I'm participating in this one, and I'm not going to waste it. Remember that you haven't made the money until you take the money. If you have a 50-cent stock that you thought might go to $2, and right now it's at $2.25, you revisit the reasons you bought that stock, and you revisit your expectations. Don't just reset expectations because you feel good about the stock. Remember that the lesson in the Rural Classroom is always about the difference between price and value and price and expected value. And if you've been paid, don't get afraid to be paid. Month of October, I'm getting paid for 5 years worth of risk. So buyer beware.
Yes. Oh, is this? Please God, don't let there be another oil boom. Wait a second time. Is that you, Albert? That's good. All right. So basically, your suspicion is, although you haven't had a chance to look at it, that the short report on the shorting on Aya Gold and Silver is probably misplaced just because of your history with Benoit. But judging by the comments here, everyone wants to see Benoit LaSalle in the Rural Classroom. So let's do it. Okay. And to emphasize what that looks like on a chart, we go here to Aya. You can see the Aya stock and this precipice that's fallen, the massive amount of shares here. That's what it looks like when there's a short position on. That being said, and not just that stock, but other ones in your junior portfolio that you started buying 5 years ago have had a monumental run. You are way what you call past the point of concern. And so coming up here, you're going to be taking some of those profits, basically getting your positions now for free. And you just want full disclosure, everyone to know that, that you're taking your risk off the table. The perfectly timed third version of the boot camp series on gold is coming out, and that will be October 4th. So anyone that's interested, maybe we could put a link down below, and Albert's already on it, and participate in that.
And Steve, listen, it's important that people consume the boot camp in conjunction with the lessons taught in Introduction to Natural Resources here at the Rural Classroom. That lecture series is free, so of course it has a money-back guarantee as well. You are meant to use the boot camp, use the information in the boot camp in the context of the lessons taught at the Rural Classroom.
Okay. All right. I actually had although I am a shareholder in Aya, I actually had a short position on them. I bought some puts because I saw that there's going to be a rebalancing of the GDX, and it looked like they were getting rid of Aya out of there, which, if my math was right, was about 2.5% of the company. So when I saw that it went down this morning, I thought that I was really smart, and I think I may have just been lucky and very good timing on this other short position. So I don't know. We'll see. I had limit orders on the way down, so I'm invested as well. I'd really love to see Benoit in the classroom and do another do your due diligence like we did with Jason Jessup.
Great. Well, we'll invite him, and I might even try to put together a panel. My understanding is that the short report dealt with allegations of fraud with regards to reserves and resources.
Yeah.
We have a lot of people in my contacts database that are awfully damn good at resource calculation. And so it might be that I enlist the support of somebody better than I, technically, with regards to reserves and resources.
Awesome. Let's do it. Let's do it. Anything else, or should we get to the questions?
No, I think we should do it. I think we should get to it now.
Okay. All right. We had a few come in before the show because we got some people overseas where it's 2:00 in the morning right now. We hit Richard's question on Aya. We hit Burke's question on Aya. We have, let's see. Freeport McMoran. Have you seen the recent situation at Grasberg?
I have, and I'm not yet a Freeport buyer. I love the Grasberg ore body, but I note that the mining method here is block cave, and I note too that the problem is mud flow. That's terrifying.
Yeah.
This mine, Ertsberg Grasberg, occurs very high up. I think 12,000 feet, 3,000 meters or something, in Papua New Guinea, and it is not uncommon for them to get 10 or 12 meters of rainfall a year. Probably the highest rainfall active mine in the world. A block cave is where you excavate the material under an ore body and you basically let a mountain sink. That's all good, unless you have too much water, in which case some of the ore may turn into muck and fill up all of the other excavations. It is too early for me to have reviewed the data. I don't think Freeport has the data with regards to the potential impact on this. I think they're going to make it work. They made an open pit work. And the pumping costs, if you have one of the largest open pits in the world, one of the largest holes in the ground in the world, in an area where you get 10 or 12 meters of rainfall a year, suggests some technical challenges. But there is an off chance that this shuts the mine. A very important piece of news. Of course, the fact that we still have 5 miners trapped is an absolute tragedy. I only pray for their safe release.
Yeah, that's got to be terrifying and scary. Yeah, and this is not a small mine. I mean, it's responsible for something like 1 or 2% of the planet's copper.
I think 4% of the planet's copper.
Oh God. Okay.
And by the way, it's also a 1 million ounce gold producer as a byproduct. This is an important mine.
Okay. All right. That hit Rajiv's question, and let's see. Hunter wants to know about Atex Resources valuation, 750 million Canadian versus its latest resource estimate. A lot of capital needed to block cave.
I would ask the questioner, first of all, to ask himself the question in the context of the lessons learned in the real classroom. What is the net present value? What is his assumption of the probabilities? And importantly, when is the start date for the net present value? If the questioner believes that the start date is 6 years from now or 10 years from now, understand that the net present value needs to be burdened by 6 or 8 years at 8% or 10%. I am an Atex shareholder. I have already reached the point of no concern on Atex, which is to say the stock has done well, that I have done well enough that I have sold enough that I no longer have a basis. That notwithstanding, I'm always interested in questions like this. But rather than rely on me, the tools exist at the Rural Classroom to familiarize themselves, for people to familiarize themselves with how to reach that conclusion themselves. Note that there are probably only 30 successful block caves in the world. To the extent that Atex attempts to block cave this themselves, that would be problematic for me. The size, the tenor, the quality of the ore body is such that ultimately I believe that either in conjunction with a partner or having been sold, that this deposit, if it gets developed as a block cave, gets developed by somebody with substantial expertise in block caving.
Okay. Um, Rick, have you been able to raise your ranking on Marimaca copper?
I have attempted to, but the market has raised its rating on Marimaca faster than I have. This has been a real market darling. The recently released data from the company is extremely encouraging, so I have not yet raised my ranking.
Okay. Let's see. Boniface wants to know. Oh, thank you, Rick, for reprimanding the classroom for not paying attention to the Tier 1 boot camp. News flows the other day. What other than your caution against a bull market froth should we keep in mind?
I think people need to pay attention to their own psyche. We talked a lot about this in the boot camp, but it's very difficult to do. When you feel good about your portfolio, you're responding to recent stimuli. And when you feel good, it's precisely the time that you should be scared. And if you're scared to death, you can be sure that the rest of the market is scared to death too. The fact is that when you feel horrible about things, that's the time to be a buyer. When you feel euphoric about things, that's the time to be a seller. Easy to say, and very, very, very tough to do. I found myself in a circumstance. I was in a recent vacation in Africa where I had 40 hours on the way there on the plane or various planes to think about this. And I thought, you've been doing this game now for 50 years. You are in a classic frothy bull market. The market is occurring 18 months before you thought it should. And when you come home, you should do sort of an audit, if you will, on your positions and do an audit on your psychology, because this seems like a time when you could reach the point of no concern in a whole sector. In fact, when I came back, those suspicions turned out to be correct, and so I'm acting on it. I would ask the people listening to this call, rather than sell reflexively, that they think about themselves. They think about the position in resources and the speculative position in junior resources relative to their portfolio and relative to their comfort. They need to think about what level of selling would substantially reduce their overall risk, and they need to decide for themselves whether or not to do it. I was rather stunned, frankly, about the amount of money I had invested in the sector. I did it in dribs and drabs over 5 years. Mercifully, being 72 years of age, I have a fair amount of money. But when I looked at how much I had in place and I figured out that I could take away all of my downside by giving up a little bit of my upside, that sounded like a real good trade for me personally.
Yes. Okay. If you guys are watching on Twitter or YouTube or any other outlet, follow the links down below to the Rural Classroom Plus. This is where we're pulling the questions from the Rural Classroom Plus students. So head on over there and we will see you there. Follow-up question from Boniface. You rightly keep educating about counter-cyclicality and going to places that feel uncomfortable. But you also called out your past mistake on the Living Legends panel, that you were too often too early. Can you please frame that in today's context, and what are you looking at?
Well, first of all, there's nothing I'm going to be able to do about that. I'm a pathological cheapskate. I'm attracted to hate. And so I will always go into countries like Mongolia 3 or 4 years early. Sometimes, however, early isn't merely early, it's wrong. Depending on the discount rate you use, if you're 5 years or 6 years early at an 8% discount, you're not early, you're wrong. The other thing is that countries can change. My buzzword has always been that a country that can't get any worse gets better, and a country that can't get any better doesn't, it gets worse. I've had a couple occasions in my life, well, one in particular, Russia, where I had 22 or 23 very, very, very good years. And all of a sudden I had a very bad year. Now, the truth is, when I look at Russia, the amount of money that I took out of Russia relative to what I lost was huge, which is to say that my losses were insignificant, but they occurred quickly and they hurt my feelings. And Russia counts, I would say, as a mistake. I didn't believe that we would be stupid enough to force the Russians into a war, or the Russians would be stupid enough to instigate a war. whenever I underestimate the stupidity of the political class, I'm always wrong. But I need to say, and I've been punished in other political risks I've taken, Mali and Burkina Faso, French West Africa, as an example. But the truth is that going into very hard countries, I'm thinking about going into South Sudan with a Lundin family, a 10-bagger, going into the Congo with the Lundin family and with Friedland, a multi-bagger. Actually, my entire experience in Russia from 1988 until that experience crashed in 2022, very, very, very good experience. As early as I am on the buy side, I'm usually early on the sell side too, because I'm an absolute value guy. I remember having a discussion with Alexander Green and Steve Sugarud about BHP some years ago, maybe 20 years ago, saying that the company had reached my estimate of its intrinsic value. I remember Steve Sugarud saying, "You think the market cares about your estimate of intrinsic value? We're in a commodities bull market. Most people buying and selling BHP don't know what intrinsic value is. You need to be right and sit tight in a secular bull market." The truth is, I'm incapable of doing that. I can do it for a while, but given my makeup, where I'm a net present value fundamentalist, I always buy too early and I always sell too early. I'm reminded of Bernard Baruch's quote about that, about perfection in trading. He said that the person who always bought at the bottom and always sold at the top was a liar. It didn't happen. And in my career, taking a big fat slug out of the middle when I've been right is something that's worked for me. People need
Yeah.
to develop their own strategies and they need to criticize their strategies so that over time their performance can improve.
Okay. Yeah. You capture the big slug in the middle and you might miss the last 20 or the beginning 20, but as long as I think we got the quote of the day here. Whenever you have whenever you underestimate the stupidity of governments, you've been wrong. All right. Let's see. Stefan wants to know, please ask Rick to discuss anything he knows about antimony and the current stimulus involving projects and people are trying to get off the ground, like Nova Minerals in Alaska, and how it is similar to established companies like Perpetua, who have been pulled off antimony grants and revenue.
So antimony is the flavor of the month, which means that the time to have been involved in antimony was 3 years ago. I'm not saying the game is over. What I am saying is that it is a loved as opposed to hated commodity, which means that you are buying into a sector where you have a lot of competition, some of whom has been preparing for this for a very, very, very long time. Students of the Rural Classroom will understand something else, which is to say that my criterion for investment, irrespective of commodity, is a world-class deposit, a deposit that will perform in the bottom quartile of all-in sustaining cost worldwide and will be in the best quartile worldwide in terms of return on capital employed, at least on a prospective basis. The deposits under discussion will likely do well in the market because of the hype in the market. But the U.S. antimony deposits, with the exception of Perpetua, which really is a co-product credit with gold, likely do not, first of all, meet the size test. I like deposits with over $2.5 billion of recoverable in situ reserves and resources at today's, not a future commodity price. I also like deposits that set in the best quartile worldwide in terms of production cost. Those usually are not American. And I like companies that generate at current commodity prices a 25% or better return on capital employed, but at least in the best quartile worldwide. I think that the antimony juniors, particularly the US-based juniors, the ones that are at least hoping to extort money from the US taxpayer, will enjoy buoyant share prices and perhaps a lower cost of capital. That in and of itself is not sufficient inducement for me to speculate. I am and have been for many years a Perpetua shareholder because I believe that over time that deposit was so profound. By the way, I've been an owner of various parts of that deposit. really going back to Ventures Trident, which is to say 25 years. I'm very, very, very familiar with that deposit. The best part of it was in Vista Gold years and years and years ago when I financed Vista Gold. I know the deposit very well. I'm a holder there, and it's arguable that the production cost on the antimony is free, which is to say it's paid for by the gold. Free is a pretty good price. It is also one that doesn't have a permitting challenge because it's permitted. When you're doing the net present value calculation, you don't need to discount it based on the time to construction start because construction has started. Having said that, the share price is up 4 or 5-fold in 4 or 5 years. It's no longer cheap. It is a very, very, very large deposit, 5 million ounces of gold plus with antimony byproduct credits.
Okay. JC just sent me a message. I might be asking the questions from last week. I'm just pulling them from the start here, so I'm going to go down to live. And sorry, so my fault. Maybe I'm not as technically competent as I thought. Okay. Steve wants to know, what's your opinion on Ivanhoe Mining? Is it too early or is the risk behind?
The risk is never behind. Understand at Ivanhoe, you're operating in Congo, where there is always social and political risk. You're operating with a partner that's a parastatal with the Chinese government. So some of the political risk is obviated, let's call it by Chinese foreign policy. The second deposit that you have, the Kipushi zinc deposit, the highest grade zinc mine in the world by a country mile, is also in Congo and also in Katanga. So you run the same range of social and political risks with Kipushi that you do with Kamoa-Kakula. Recent students at the classroom will remember that the Kamoa deposit experienced a shutdown, seismic tremors, as a consequence, I think, of too aggressive mining. The subsequent flood that occurred has been dealt with in very, very, very short order. Amazing. But I suspect that the capital costs and the operating costs at Kamoa are going to increase as a consequence of the fact that those seismic tremors themselves were caused by very, very, very aggressive mining practices, which will probably be reined in. The other piece of political risk that you face is in South Africa, where I think the political risks are real. Ivanhoe is developing something called the Flat Reef, which is, this is not a typo, an 80+ million ounce platinum, palladium, and gold deposit. South Africa has a different range of political risks, but they're real, and a different range of social risks. If the social and political risks in both countries are overcome, Ivanhoe is extremely cheap. Now, people who are listening to that response need to know that my basis in Ivanhoe was very low and my position was very, very, very large. I reached the point of no concern, which is to say I dragged my capital out of it. And then for fun, I did it again. And just for practice, I did it again. So I'm really, truly playing on the house's money. I'm also a real fan of Robert Friedland and the whole team at Ivanhoe. People who listen to this bullish response need to understand how they would react to social and political turmoil in either or both of Congo or South Africa, because there's a high probability that you'll experience it.
Okay. Luce wants to know. Oh, yes, I've gotten a lot of questions on this. Please ask how the process of the valuation course is and when we can expect to start the course. So we're talking about doing a course out at the Colorado School of Mines. Any updates?
We're in discussion. I say we're in discussions. We're in stale discussions with the Colorado School of Mines, not because they've backed off, but rather because I took 2.5 weeks off to go with my wife to Africa, to Namibia, to Botswana. And we expect to restart that. The course architecture has not been decided on yet. The Colorado School of Mines does 3 different valuation courses for different levels of people, but they've never done one for high net worth involved investors and speculators. So in addition to designing the course, we need to design the syllabus. There's a lot of work to do. We are getting a surprising amount of interest on this for the Root Classroom. The format that we're looking at is either a 4 or 5 day course at the Colorado School of Mines. Likely, rather than hold it over a weekend, we're going to hold it through the week so that people can spend the weekend either anticipating or recovering or relaxing. As I say, it will likely, if we do it, occur at the Colorado School of Mines. I'm thinking it's a 4 day course put on in conjunction with the faculty at the Colorado School of Mines. I need to say, I did something called Mining Investment College with the Colorado School of Mines in 1996. I was very concerned that these profs would be far too dry. Turns out they're natural hams if they're in front of an interested audience, and I know my audience to be an interested audience. So when the course architecture is decided, we will return to the Rule Classroom, talk about what the course architecture looks like, and talks about the cost. And by the way, this isn't going to be cheap, either in terms of time allocated or in terms of monetary cost. And you are going to have to work your behind off. You're going to have to show up to the course familiar with a bunch of stuff that you're not familiar with yet before you take the course. So we're going to distribute a syllabus, if we do this, to everybody who's going to take the course, so that even before the 4 days of the course, we're going to work you to get ready for the course. There's going to be prerequisites here. I'm not going to come to your house and see that you're reading the books, but it's going to be very obvious to me on day one of the course who's done the work and who hasn't done the work. And by the way, in this course, there's going to be no money back guarantee, because your ability to get out of it what you put into it will have to do with your preparation. That's up to you, not up to me.
Awesome. Yeah, I'm looking forward to it. I can't wait. Okay, William and a few other people that I saw in the comments are curious on your current views on meteoric resources.
I'm still attracted to meteoric. Understand the original premise on meteoric, which we've talked about in these sessions many times. Rare earths are out of favor. Brazil is out of favor. The subject is boring. This is a very large deposit where there's a lot of uncertainty. Uncertainty is also unpopular. It's also a deposit where I think there's a reasonable chance that it will be the lowest cost deposit on the planet, a tier 1 deposit. So I own this stock with the thought that I could either lose half my money or make 10 times my money in 10 years, getting no gratification over the course of the next year. There is another company, an Australian company, right next door, which I'm also looking at. My suspicion is that the two of these companies might merge. Meteoric is a lot farther along with regards to delineation, deposit understanding, mining and metallurgy. The other company would seem to have better community and political relationships. So in the context of looking at Meteoric, I'm also doing a deep dive into the adjacent company, whose market cap is a third of Meteoric's market cap.
Okay. Jeff wants to know, Eric Sprott recently made a large investment in 1911 gold. Do you have a rating?
I don't.
Okay. And William wants to know, do you have an opinion on Talon Metals?
I don't.
Okay. Han wants to know, hi, Rick, what's your opinion on Tower Gold project in Moneta Gold and Colmac Gold project, Nighthawk Gold? Both projects belong to, STLLR Gold now? Do you have any comments?
Colamac I have some familiarity with, and I'm broadly attracted to Colamac, not necessarily as a standalone, but in the context of other infrastructure in the sector. But broadly speaking, I'm less qualified to answer that question than others might be.
Okay. David wants to know, he's asking about Chicana Copper. Do you think it'll come back to life?
Do I think it'll come back to life? That's a smart guy. It's a good piece of property. The answer is yes. But it's important to note that is a very good geologist who raised enough money to test two theses. And I would suggest he tested them both. And the answer to both came up no. So in its current incarnation, the answer to that is no. I think they'll keep the property. I think the property, if they sold it, is worth more than the current market capitalization, which is saying I think it's selling at a discount to liquidation value. But the company is going to need to raise general and administrative capital. Then they're going to need to restudy the property. Then they're going to need the money to test the new thesis. People who bought the company because I bought it on in the context of two different exploration theses, both of which proved not to be true.
Okay. Josh wants to know, what do you think about K2 Gold? Is California open for business?
I would not be a speculator or an investor in mining in California. That has no interest to me. The worst experience of political risk I had in my entire career, which is to say measured by total loss, was in California. I was part of a group in 1982 that discovered the Castle Mountain deposit, sadly 7 miles on the wrong side of the California Nevada line. And it took us 13 years, and if my memory serves me correct, $16 million in bribes. By bribes, I mean in this case campaign contributions, deeds in lieu, stuff like that, before we could put that deposit in production. Now, think about the impact on net present value of a 13-year delay. I estimate that early shareholders of Castle Mountain, then called Viceroy Resources, were deprived of about $600 million in net present value by the California legislature. The legislature's gotten worse since then, not better. I'm the wrong guy for a California project. I'm from there.
Okay. I got to interview the CEO of Luca, and we have a lot of questions coming in from Luca Mining because they probably run up. Blaine, let's see who else is asking. Chase. Any thoughts on Luca Mining?
My thoughts on Luca are unchanged. They've done a good job. The high points of Luca are that it's a Mexican company operating in Mexico. The social and political challenges in Mexico, particularly in West Mexico, are best addressed by a Mexican. And this Mexican is a very, very, very high quality guy. He was able to buy 2 projects at rock bottom valuations and return both to production. The test now will be, does he get them to nameplate capacity? What is the brownfields exploration result? I think the potential's exquisite. And will he be able to use the free cash flow from these deposits to at once expand both of them and achieve a hat trick, which is to say buy something else and turn it around? If he's able to do that, this is a really, really, really long ball home run. I am an owner of Luca, but I need to say the share price performance over the last 2 years means on a net present value basis is no longer cheap. You are now betting on his ability to ramp these deposits up and repeat his magic. I have not sold any Luca, and I don't think I'm going to sell any this particular round. But this, given the valuation, is not without risk. A year ago, I would suggest that this was without inordinate risk.
Okay. A lot of people want to see Aya on the stream and another due diligence. Alan, Cole, too many people to name. Tillman, everyone wants to see that. So I think we found
Albert, if you're listening, we have our work cut out for us.
Yes, there we go. All right. Jatinder, Rick's thoughts on Foran Mining.
I don't own Foran, although I'm attracted to the news and I'm very attracted to the people who own it. It's unranked.
Okay. David Riley wants to know if you're familiar with Vista Gold and have you rated it?
Vista's been on a tear, and I not only know Vista Gold, I'm sort of the author of Vista Gold. If you go back some number of years, 20, I guess, maybe more, they owed me some money, and they were unable to pay. And the consequence of that is that I and my investors became far and away the largest shareholders of Vista. And being left with a bunch of lemons, we had to make some lemonade, and we did. We set about in 1989 using Vista as a vehicle to buy gold deposits that were unloved and out of favor. In fact, had no hope at $300 gold that would do well at $400 or $450 gold. And if my memory serves me well, we bought 11 deposits, and the gold price did what we hoped it would do, and we had a 20 bagger in Vista. We spun Allied Nevada with Highcroft out of Vista. We spun it out with a distribution to shareholders and a financing at $1.30, and Allied Nevada hit $40 a few years later. Since I exited, the team has reversed the strategy. They have sold the deposits that we bought, often fairly cheaply, and focused on putting something called Mount Todd into production. For the record, we bought Mount Todd for $6 million. These people have put a lot of money into Mount Todd. They have sold off the other assets of the company to finance Mount Todd. Mount Todd did not work at $2,000 gold. It probably didn't work at $2,500 gold. It may well work at $3,500 gold. It's a very large deposit, 7 million ounces plus. Not much exploration upside. They've drilled the bejesus out of it. But at 7 million ounces, you don't need much exploration upside. It's very, very hard rock, which when it was in production before was one of its undoing. It's remote, and the diesel to run the power plants had to be trucked in. That was expensive. And the rock was extremely hard, which meant that things like mill liners and balls got consumed a lot. I don't own Vista. There are, from my point of view, cheaper optionality plays in the market today. But it wouldn't surprise me if the upside continues. This stock re-rates at $3,500 gold, $3,600 gold, $3,700 gold. There are other people who I respect, Adrian Day, who will be appearing in the Gold Developers Bootcamp in a couple of weeks, who disagree with me, who are solidly bullish on Vista.
Okay. Got several questions coming in from basic thoughts on North Isle copper and gold.
No thoughts.
Okay. Let's see. More meteoric. We already hit that one. And Bo wants to know, any thoughts on Prince Silver trying to revive an old silver resource in Nevada?
I don't like the size of the deposit. There's a whole bunch of Me Too silver things happening now with silver at $44 an ounce, $45 an ounce. It could be. I mean, the best place to look for silver is in the head frame of inside of the head frame of a silver mine. It could be that with additional exploration, this becomes a 100 million ounce deposit. But deposits below 100 million ounces don't interest me very much, irrespective of their domicile.
Okay. Vincent, how about Banyan? What are your thoughts on Banyan Gold? That has been amazing since the symposium. What are your thoughts?
I'm a Banyan holder. I think people like myself who have experienced doubles and triples in a fairly short period of time might consider taking a little off the table. People who haven't, people who are looking for development optionality, this is a pretty high quality deposit, and it's a very high quality lady behind the deposit. I think a resolution of the problem at Victoria Gold up the road, which is in receivership as a consequence of a landslip, will go a long way to restoring confidence in the ultimate build out of this deposit.
Okay. David wants to know, any comments and rankings for AMARC Resources?
AMARC. I don't own AMARC, but I'm positively inclined to it. They follow the prospect generator business model around porphyries in BC. This is the Hunter and Dickinson group, in particular Bob Dickinson, a friend of mine literally since university days, serially successful in porphyry exploration in British Columbia with some very good news. This is just one I need to get to know better before I buy. Solidly impressed by the work that the whole HDI team is doing. I have been a skeptic about BC porphyries because of their relatively low grade. The good news about the BC porphyries is that they often have pretty substantial gold credits. Those gold credits are worth a lot more at $3,700 gold than they were at $1,500 gold. So you need to rethink the whole range of these things. It's useful to look at the joint venture partners that AMARC enjoys and look at the fact that they are, by and large, all large multinational copper gold development companies that speaks a lot to the quality of A-Mark's projects.
Okay. David wants to know, Orla Mining will be producing 500,000 ounces of gold next year and valued at about 1/3 of similar peers. Any thoughts?
I think that's wrong, the
Okay.
500,000 ounces of gold. I think they hope to ramp up to 500,000 ounces of gold, but I think they commence production at a substantially smaller number. Orla is one that was a real market darling, got ahead of itself. It hasn't participated in this rally simply because it overshot earlier. And in addition to being overshot, it was owned fairly substantially by two large multinational mining companies who they bought their assets from. The market has taken note of the fact that those major multinational mining companies have turned their Orla shares into cash, which has caused Orla shareholders to wonder whether they shouldn't do so themselves. The run-up in the Orla shares was substantial enough that I took my money off the table even before the multinationals did. Whether or not I was right or not is a question that will be answered 2 or 3 years out.
Okay. Blaine wants to know, you've commented on Argenta Silver. They were out at the Rural Symposium and have since had well, I think it's more than a double just off the top of my head. What are your thoughts?
Superb drill results. The question here is metallurgy. This is a highly refractory deposit. Can you liberate the silver, and can you liberate the silver in an environmentally friendly fashion? That's what this is all about. Prior operators have also hit sparkling drill holes, and they've always put the drill away as a consequence of metallurgical challenges. If this deposit becomes large enough, perhaps the lesson that we learned at Skeena is valuable here, which is to say you don't necessarily, if you have enough material at high enough grade, need to solve the metallurgical challenges. Rather, you ship the float concentrate, even with the impurities, to smelters, and you pay the smelter penalty. We aren't at that level yet, but I need to remind myself that I was late to the Skeena story, despite knowing the ore body very, very, very well. And when it occurred to me, it didn't occur to me, when it was explained to me that I didn't have to worry about the upfront capital cost because the grade of the deposit was high enough that it could stand the penalty, that caused me to look at Skeena a different way. And I'm trying to understand enough about the metallurgy at Argenta that I can not be worried about metallurgy and merely be concerned about exploration too. I haven't overcome that challenge yet.
Okay. Luce wants to know, what are your thoughts on Kincora Copper?
I'm a Kincora shareholder. Kincora is a prospect generator in Australia, focused on copper in the McLaughlin Fold Belt, a geological terrain that I've known for 30 years. I'm attracted to. Great joint venture partners, high risk front end exploration using other people's money and expertise. This is the sort of quintessential Rick Rule exploration stock. Boring until it isn't. I have a large holding. Front end exploration is extremely risky. It takes a long time. If it works, it makes unconscionable amounts of money, which I'm looking forward to.
Right on. Unconscionable amounts of money. I think we all like that. Okay, Doug wants to know your opinion and ranking of Capitan Silver.
Don't have one. Capitan was, of course, spun out of Riverside, a longtime favorite. I note that Capitan has a $200 million market cap. Silver's in vogue today. You can buy the parent company, which generated Capitan, 3 other spin-outs, and currently spinning out Blue Jay. You can buy the parent company with a $13 million market cap and $7 million worth of cash and securities in it. Were I still a Capitan shareholder, likely I would sell at least half my Capitan and use the proceeds to buy the parent, looking for new spin-outs.
Okay. Doc wants to know about West Red Lake Gold. Any updates there?
None. I'm a West Red Lake shareholder. I have sold some shares given the fact that the stock has tripled. And also that they returned the mine in production without completing a new feasibility study, which always scares the hell out of me. I like the people a lot. I like the deposit. I know the deposit reasonably well. Sprott made a loan against the deposit, admittedly after my tenure there. We shall see. The risk here, I mean, it would have cost them $15 million to update the feasibility study. It would have delayed production for 18 months. It's the company's position that the deposit's been studied to death. What was wrong was that the resource calculations were done with drilling that was too broadly spaced. And when they brought the drilling densities down, they did internal work which allowed them to pursue the deposit with feasibility grade confidence. This may be true, this may not be true. I'm an old lender. I like third-party verification.
Okay. Still getting a lot more people in asking about bringing in Benoit. So I think we're good on that. Let's do
I
one
hope
last.
you're listening.
Yeah. Yes, Ben, come on. The water's fine. Jump in. Okay. I've seen several people ask about Devon Energy. What's your final thoughts here? We're wrapping up on Devon Energy.
North American natural gas is starting to work. It's going to continue to work. When I described it a year ago, I described it as a 5 to 7 year play. We're a year in. It treated me reasonably well. I suspect it'll treat me better. I would also say that when I look at the length and breadth of the natural resources market, the commodity that is the most out of favor relative to its net present value is oil and gas. Natural gas is less out of favor than it was 2 years ago, but I think it's got a long, long, long way to go. So for investors as opposed to speculators, Devon's a great name.
Okay, I've heard some criticism on Devon in that Henry Hub is showing, I'm just guessing at $3 a million BTUs right now, but they're selling into the market at I don't know, 80 or 85 cents or something like that. I asked you about that, and you said, yeah, there's a lot of other products that they sell where they bring a lot of their profit. Can you hit on that?
Well, two things there. Devon's West Texas production produces gas as a co-credit, like the whole rest of the world. And West Texas is way oversupplied with gas. So they have to take what the aggregators will pay them. The aggregators then get the money taking the gas from West Texas to Henry Hub. There are other parts of the country, the Anadarko Basin, as an example, where Devon is fairly strong, where they are receiving Henry Hub prices. If you look at the totality of Devon's product spread, which is to say, if you look at their cash flow and free cash flow on a quarterly basis, they're in pretty good shape.
Okay. Thank you very much, Rick. Do you have any final thoughts to wrap up?
I don't. I'm delighted that we're able to continue to do these series. I hope that the listeners, rather than merely ask me questions about companies, will participate in the real classroom to the extent at least of reviewing the material in Introduction to Natural Resources, so that over time, as an example, when I shed my mortal coil, that they'll be able to answer these questions themselves. I continue to urge people to pay attention to the educational aspects of the rural classroom. I look forward, if we're able to do it, to inviting Benoit Lassalle on, not only to answer questions, but to participate in teaching people how to ask and evaluate questions. And finally, I look forward to seeing all of you at the third segment of the boot camp with regards to where the market is right now, the rest of the gold specter.
Yes. Thank you very much. This is always a pleasure. Rick, I will see you next week on our show, and interviews every week here in the Rural Classroom. And if you're watching on YouTube or Twitter or any other outlet, join us in the classroom and join a community of, I think we're over 14,000 students right now. So it's an amazing community. Activity all day, every day. Comments going on, people discussing current events in resource stocks. It's where you want to be. So I'm honored to be a part of it. Rick, thank you very much. You have a wonderful rest of your day.
Thank you.